My name is Maryann Umoren Selfe. I'm the Head Investment Solutions at BIL Suisse. I came into the world of investments 20 years ago, and I was fortunate enough at the time to also be exposed to the world of investment risk management. A good place to start is thinking about what it is you want to achieve long term, and then building out a strategic asset allocation that provides the best opportunity to achieve those goals. Now, when it comes to building out the private markets component of that portfolio, it's important to remember that this is different from public markets investing. So we have to rely on a different set of tools to manage the risk. Now, one great tool for investment risk management is active management decisions on asset allocation. So if you're investing into private markets, you think about how much should you invest into the different sub-strategies, for example, into buyout or venture or private debt. Now, these decisions can have a meaningful impact on portfolio risk and return. And so time spent on portfolio construction is really time well spent. Diversifying also across the underlying sources of risk is another great risk management tool. And so if we think about investors, say for example, investing into private debt, one way to diversify could be diversifying exposures across the capital structure. Another way could be diversifying exposures across the different types of borrowers and even collateral types. Every investment carries an element of idiosyncratic risk. And we know that in the private markets, there's greater dispersion between risk and return profiles. So the more managers that you invest with, then the more that idiosyncratic risk is diversified away. And that's a good thing, right? But here's the thing, on the flip side, the more diversified you are, the more you diversify away the potential opportunity for alpha generation. And so there is a trade-off between risk and return, which needs to be managed actively and carefully. Because at the end of the day, for the investor who's also an entrepreneur, it's not just about return. It's also about lifestyle. It's about family. And for some, it's about the next generation. I think for investors coming into the private market space, one thing to note is that even after navigating the complexities of private markets portfolio construction, there is also the challenge of maintaining allocations at or near their intended weight. Because unlike public markets investing, investors just can't rebalance or redeem that frequently in the private markets. And so it's really important that investors define early on a multi-year capital allocation roadmap, because this will ensure that long-term investment objectives can be attained. Shurigon, kann ich besalem bitte?